Hi guys, this is Irfan here from smartincubator.com and welcome to another video. In today's video, I'm going to show you exactly when to use Fibonacci retracement tool and a smart money concepts trading strategy. If you're a scalper, even if you're not a scalper, you can still use these strategies. But if you've been following me for long enough, you know that I'm a scalper. I wake up around a specific time and I trade on a specific time frame, because I want to get in and out of the market very quickly, and I use two strategies only: smart money concepts trading strategy and Fibonacci retracement. So in this video I want to show you how you can combine them together in order to get the best confirmation and get the most out of your trades, and if you can't use one of the strategies, how to use the other one. So this is a very good example right now on GBPUSD on a 5-minute time frame, and today is Saturday, the market is closed. So the thing is that I can show you literally what happened on Friday, how you could trade, how you could take 3 profitable trades back to back on a specific time frame, one strategy, one pair. So for example, let's say that you wake up or you want to start trading around this area right here. Okay, so you wake up and then you see that the market is bullish. We have a bullish trend, higher highs and higher lows, and then you wait for this candle. You see that we have a huge drop. So the first thing you need to do is just noticing that we have a break of a structure around this area. So it means that the market is trying to change its direction because it actually broke the swing low, which is a really important part, and we have a huge red candle here as well. So it means that the price is trying to reach these levels around this area to grab all the liquidity and stop out all the buyers, because as you can see we have a consolidation here. Buyers take their buy position here, put their stop loss here, and the same thing happened here. See these low points, they're all liquidity, and there are so many stop losses around this area. So liquidity means money, and money is where people put their stop loss around. So this is a very important point to pay attention to. So this break of a structure here can actually show us that the market is trying to go bearish. So the first thing you need to do, guys, if you want to trade this instrument, is to find order blocks, high probability order blocks, and using Fibonacci retracement. So if you don't know what order blocks are, you don't know what gap is, you don't know what liquidity is, I highly recommend you to watch my first video on my channel after watching this video. Not now, don't skip this video, it's very important, and then you can have a better understanding of order blocks. I talk about it on every single video that I put out on a daily basis, guys. This is what I'm using, so you know what that means. So in this case, I just wait for a very good correction after a huge drop or a huge spike towards upside. So as you can see, the market is trying to do correction, and this is what it's actually doing right now. It grabbed the liquidity around this area, as you can see, because of this shadow here. This shadow here shows that the liquidity around this area has been grabbed. And now what I personally do, if I couldn't find any high probability order block around this area, I use my Fibonacci level and then actually draw it from the top all the way to the bottom where the correction starts. And then after that, I identify my golden zone, which is between 50% and 60%, like in the middle exactly is our golden zone. So I usually use this rectangle here. Guys, if you want to get access to TradingView Pro to kind of analyze the market like this and use professional tools, grab your license from the link below in the description. Then you can get access to TradingView Pro. It's an affiliate link. I much appreciate it if you use my link to kind of support this channel so I can put out more contents like this. So it's a very useful tool, guys. It's way better than MT4. You don't want to analyze the market on that. TradingView is a really good one. So this is our golden zone, guys, and what I personally do is to wait for the price to tap into this zone and then see what kind of reaction it does, because it's very important that when you wait for the price to tap into this zone, you got to wait for the next candle to see how it reacts to this zone, and then you take your sell position or whatever that is according to the trend. So in this case, we have this huge rejection that happened exactly between golden zone and above 60% level, but it didn't close above 60%. It's a shadow, so it means that sellers still push the price towards downside, and the price kind of closed right here. So it opened here, it closed here, it tried to close here, wasn't successful. So in this case, you know that you have two confirmations. The first one is a break of a structure towards downside. The second one is actually a correction and then tapped into the golden zone and rejected. And also the third one is yeah, two strong confirmations that you can use right now. So in this case, what you can do, you can actually take your short position from here all the way and put your stop loss here, and you can put your TP right here, 1-to-1 trade. Why did I put it here? You could also put it right here because we also have liquidity around this area, but just to be on a safe side, in this position we can take a 1-to-1 trade, which is almost 10 pips if I'm not wrong. I don't know how many pips, or 16 pips. It's a very, very good amount. And then you see that is actually smashed profit. And if you pay attention, you see that this liquidity is already grabbed too. So if I draw my line here, my horizontal line, you see that we have a big shadow here that just got blasted through this support level. So it means that every single buyer got stopped out around this area. So as I said, you could also put your TP here, so it would be a 1 to 1.5 risk reward ratio, and that's a really, really good one. So this is the first profitable trade that you could take according to the trend. And now in this case, you need to wait for another confirmation. So if you pay attention to this drop here, you see that the correction happened here, and then again, and we had another drop here. So it means that we have a new Fibonacci retracement level. So what I mean by that is that where the drop happened, because this break of a structure is exactly here. This candle is a start candle, and then it dropped, break of a structure. It actually, because you know we have a low point here that kind of got broken, and then you can start drawing your Fibonacci level from the top all the way to the bottom where the rejection happened, and we have a correction. So again, the golden zone is going to be around this area. This is a new Fibonacci level, and then you can remove it, and then you see that the next candle, I want to show you what's going to happen to the next candle, where you can take your sell position again or not. My internet connection is not really stable, guys, sorry. I'm just waiting for the next candle to see what's going on. Okay, so this is what the next candle looks like, but guys, pay attention to this. Shadow doesn't count. As long as the candle doesn't close above that level, that's totally fine. Rejections are good signs, especially in this case. When you have this drop here and then correction, and this is our golden zone, you see that we have two rejections, one rejection here, one rejection here. So it means that the sellers are still pushing the price towards downside, and it doesn't allow the price or the candle close above this level. So it's a really good indicator, but what I personally do is to wait for a red candle that actually shows another rejection confirmation. So you see, this is a really good one. One rejection, two rejections, three rejections. Golden zone is respected. It didn't close above it. It's just a shadow. And then I personally take my sell position from here, like below this candle. Put my stop loss exactly right here, or I can actually put it right there as well if I want to. I can put a wide stop loss, and then my TP somewhere around here if I want to take the trade. And as you can see, it actually, I could take it from here to here. It's a 1-to-1 trade, and then boom, see, from here to here. It's a very good one. It's a very good one, and this is how you can easily take it, guys, using Fibonacci, because right now we don't have any high probability order block. So if you don't have a high probability order block, the next strategy is Fibonacci. Simple. And if you do have high probability order block that you can actually identify, in buyer side or seller side, just identify them and wait for it, and trade according to the trend. So I can show you an example here. So we have a high probability order block exactly right here. This is a high probability order block. See this? This is a high probability order block. So it means, in my opinion, the price is trying its best to tap into this level, and then we gotta wait for more confirmation if it wants to reverse towards upside. And the reason is that this is a high probability order block, is that because of this huge spike towards upside, the next candle never tapped into this zone, and it left a gap in between. From here to here we have a gap, and it means that this zone is never ever tapped into, and the price went up. It's just consolidating, going up further, and now it's trying to go down to tap into this zone. As you can see, we just keep getting profitable trades using Fibonacci level, and this is how it's done, guys. And you can also do it from here, another level. Sorry, we have, let me show you. Okay, even in this area, as you can see, we already took our profit from here all the way down here, and this liquidity is still not tapped into. So what the price is doing and what you can do is to draw another Fibonacci retracement level to take a sell position one more time. And sometimes you get confused. So for example, you say that we have a huge drop here, correction, and then another drop, which is breakup structure here. So what you do is to draw your Fibonacci from all the way here, and then you can do also one more thing. You can switch your time frame from 5 minutes to 15 minutes to have a more clear picture. And then here you see that we have a high point right here, and then all the way down, which is this area right here. As you can see, our golden zone is here, and in 5 minutes we have this candle from here to here. And if you wait for a candle, you see that it didn't respect the golden zone, which is between 50% to 60%. So you just need to remove this Fibonacci retracement. Sometimes it goes all the way to 70% and then gets rejected, and then goes towards your trend or your way. But in this case, it also broke the 70% line, so it didn't respect the golden zone, it didn't respect the 70% line. So in this case, you just need to remove your Fibonacci level and then wait for the bigger one, which is this one right here. And if you wait for it, you see that it literally is actually respecting this level one more time, and now boom, dropped significantly, and this is where the market closed. So you need to play around with it. You need to play around with the zones. You need to switch the time frame, 5 minutes, 15 minutes, 30 minutes. For order blocks, the same thing. Sometimes there's an order block, there's a high probability order block in a 15-minute time frame, but you can't see it in 5-minute time frame. So you need to kind of switch between the time frames. Don't go too far if you're a scalper. You don't have to do that. Stick with 5 minutes all the way to 30 minutes max. And if you want to analyze the trend and the market, you can also do it on 1 hour, but I personally stick with 5 minutes, 15 minutes, and 30 minutes. Sometimes 30 minutes, mostly these two. And then I can identify all my levels, especially for Fibonacci, because when you switch it to 15 minutes, the picture is clearer, and then you can see where the correction is exactly happening, where the drop or the spike is happening, and then you can draw a clear line, a clear level of Fibonacci, and then you can wait for the zone to get tapped into, and then you can take your trade. And this is exactly what we did in only one time frame, a 5-minute time frame. I didn't switch my time frame to 15 minutes or 30 minutes. I just did it one time for the last level of Fibonacci. I just switched my time frame to 15 minutes. I noticed this level here, that actually the drop happened from here and the correction happened from here, and now the 50% got rejected, and here we have a huge drop. So in my opinion, next week we are going to grab this liquidity for sure and tap into this level, the high probability order block, and then we'll see what happens. So thank you so much for watching this video, guys. If you have any question, please don't hesitate to ask it by dropping your comments below this video, or you can personally reach out to me. So if you enjoyed this video, give me a thumbs up, subscribe to my channel, and turn on the notification bell, so next time when I upload a video, you'll get notified as well. And one more thing before you leave is that if you want to trade completely hands-free and you don't want to get involved in the market, we have a very professional and advanced expert advisor that actually opens the trade for you and closes them on your behalf in profit. It also analyzes the market, and it has a news filter, so it stops trading 30 minutes before and 30 minutes after that, so your capital is completely preserved and protected. So if you want to check it out, go check out smarteaincubator.com. the link is exactly below in the description, and if you have any question regarding that, you know where to find me. I'll be more than happy to get back to you and answer your questions. Thank you so much. I hope you have a great weekend.